You are welcome to Graceman Knowledge Hub. Thanks for joining us on this next episode in our series. In this episode, we will be giving further explanation on the relationship between liquidity and profitability, substantiating with practical examples. Don't forget to hit the subscribe button.
Yeah, welcome to Graceman Knowledge Hub. In this episode, we're looking at the concepts of profitability and liquidity. And before going into explaining the concept of profitability and liquidity, we'll be looking at cash-based and accrual basis. These two bases of accounting are the foundations upon which the concept of liquidity and profitability are based on. Cash basis stock recognizes revenue when cash is received and payment is made respectively. This will mean that when a particular transaction occurs and cash is not received, cash basis doesn't recognize such transaction. And in the particular transaction where cash is not paid, cash basis doesn't recognize such transaction. Going to accrual basis recognizes income at the time revenue is earned and expense when liabilities are incurred. What does this mean? Regardless of whether cash is received or paid. This means that when a transaction occurs, whether cash is received or paid, whether cash is received or not, or whether cash is paid or not, accrual basis recognizes such transaction as either revenue in the case of income earned and liability in the case of what? Liability that is incurred. Just to buttress this, we have these scenarios which we are going to pass accounting entries on the sides that each of these transactions fall into, the basis which this transaction fall into. My thrift mall bought 3 loaves of bread from Chinwe Foods and paid 1,500 naira cash. My thrift mall bought 3 loaves of bread from Chinwe Foods and paid 1,500 naira cash. Looking at this, cash implication means that what? Cash concept will recognize this transaction. Why? Because cash is received and cash is paid. In the books of Chinwe Food, because cash is received, and going back to our double entry principle, you debit expense and assets when they are increasing, and you credit income and liability when they are also increasing. Cash has received and cash has increased. What do? We debit cash. So we have this series of questions to buttress these two explanations on the accrual and cash basis of accounting. Question 1. My thrift mom bought 3 loaves of bread from Chinwe Foods and paid 1,500 naira cash. We are going to treat this in the book of Chinwe and in the book of my thrift mom. My thrift mom bought 3 loaves of bread from Chinwe. In the book of my thrift mom, this is purchases. In the book of Chinwe, this is sales. And paid 1,500 naira cash. Chinwe has received cash, my treatment has paid cash. So the next thing we are looking at here, Chinwe sold 3 loaves of bread to my treatment. Sales is an income, it has increased. What do? We credit sales. With how much? 1,500 naira. Cash has also received, and we said according to the double entry principle that you debit the receiver, you credit the giver. And also on the second premise of our double entry principle, you debit expense and assets when they are increasing. So what do we do to cash under Chinwe? In the books of Chinwe, we also debit cash. My thrift mall bought 3 loaves of bread from Chinwe. Purchase is an asset, is an expense, excuse me. And because it has increased, what do we do to purchases? We debit purchases. My treatment gave cash. So in the book of my treatment has given out. And what does my treatment give out? Cash. We credit cash in the book of my treatment. What this under cash basis. We are recording under cash basis because cash is what is received and cash is paid. Question 2. HOB sold 5 packs of Ankara material to Splendor West Planet, 50,000 naira on credit. On credit. On credit. Looking at this transaction, cash basis has no business with this transaction. Why? Because cash is not received and also cash is not paid. Looking at the third question, my treatment sold 2 loaves of bread to Oriofe, 1,200 naira cash. My treatment sold 2 loaves of bread to Oriofe, 1,200 naira cash. My treatment. My treatment sold. So that means we have the sales account and we have the what? We have the cash account. For Oriofe, we have the what? The purchase account. We also have the what? Because Oriofe paid by cash. Sales. My treatment sold 1,000. My treatment sold 2 loaves of bread to Oriofe. My treatment sold 2 loaves of bread. Sales has increased 1,200 and received how much cash? 1,200. Oriofe purchase is an expense. Oriofe purchase 1,200 and paid cash to my treatment 1,200. Go to the fourth question. Chinwe Food bought 7 bags of flour, 21,000 on credit. On credit. This will not be recognized under cash basis because cash is not received, cash is also not paid. So we go to the accounting entries under accrual basis. Our fourth question related to cash basis. Now we go to questions relating to accrual basis. Now question 1, we have my treatment bought 3 loaves of bread from Chinwe Foods and paid 1,000. This will still be recognized by accrual basis because revenue is earned and coincidentally cash is also received. So in the book of Chinwe, as recorded earlier, we have the sales account and we have the cash account. Chinwe Food has sold bread for 1,500 and cash has also come in 1,500. HOB sold 5 packs of Ankara material to Splendor West Planet, 50,000 naira on credit. We know that accrual basis recognizes income when revenue is earned and expense when liabilities are incurred. Looking at this, 5 packs of Ankara on credit, because it is accrual basis, it will recognize because cash is not received, cash is also not yet to recognize because that is what accrual basis does. HOB sold 5 packs of Ankara material to Splendor Wares. In the books of HOB has sold sales to Splendor Wares on credit. Splendor Wares did not pay for this. So Splendor Wares is receivable to HOB. So we have Splendor Wares Planet receivable. What has happened? HOB has sold, sales has increased 50,000 naira. On credit, meaning that cash didn't come in for this transaction. This now means that Splendor Wares is now one of the receivable, one of the debtors of HOB, which means that Splendor Wares is owing HOB 50,000 naira. And receivable is an item under the current asset. And when asset is increasing, we say that we debit asset. Go to the third question. My treatment sold 2 loaves of bread to Oriofe, 1,200 naira cash. My treatment has sales and cash also came in. So we have sales and cash for 1,200. Cash also comes in 1,200. Go to the fourth question. Chinwe Foods bought 7 bags of flour, 21,000 naira on credit. Chinwe Food bought 7 bags of flour, 21,000 naira on credit. What does this mean? Chinwe Food has bought purchases, but Chinwe Food bought the flour on credit, which means that we have paid. But purchases has increased, expense has increased 21,000 naira. Because payable is a liability, it has also increased. We have 21,000. You can see that under accrual basis, whether cash is received or paid or not, all the transactions are recognized. Unlike the cash basis, they only recognizes revenue when cash is received and expenses when cash is paid. Thank you so much for watching. Should you have any question, do not hesitate to type in the comment section. We'll be glad to have your comment and your critique. Thank you.